Welcome to Inside Economics. I'm Mark Zandi, the chief economist of Moody's Analytics, and I'm joined with my trusty co-host, Marisa DiNatale, Christorides. Hi, guys.
Hi, Mark.
Hi, Mark.
And it's Jobs Friday. This is May 2nd, Friday, May 2nd, and we got jobs for the month of April. And so we have Dr. DeAntonio. Hey, Dante.
Hi, Mark. How are you?
Good, good. It feels like everyone was traveling this week, no? Marisa was just recounting a very long EV trek through Southern California. And you said your EV, I asked, but I didn't hear the answer. Did you have to rejuice at some point?
No.
Oh, cool.
No, I drove like 7 hours on Wednesday.
Now, were
All
you
of
sweating
those-
it out the whole time?
No, I wasn't. I knew it. I figured it would be okay, but it would probably be close,
Right.
which it was. But no, I did it. It was
You didn't
fine.
use your air conditioner and didn't turn your
I
tunes
had the
on?
AC on, blasting the whole time.
Yeah. Okay. Very,
Yeah,
very cool.
it can
Very
be
cool.
done, folks.
It can be done.
With a little planning. It can be done.
Oh, you actually planned. You said if I need juice, I'll stop here.
Yeah, but I had mapped out the mileage, and I figured I would be
Oh,
okay. Yeah.
okay.
Yeah.
It's California, though, right? There's like a charger on every
Great
corner.
point.
No?
Not in Los Angeles.
All right.
I mean, there's chargers, but there's, 8 chargers per million people or something. So it's not very,
Oh,
it's not great. Yeah.
I didn't know that. I
Yeah.
would've thought-
There's not enough chargers at all in LA.
Maybe a little better than Carbon County, Pennsylvania.
Probably.
Well, I don't understand the reference. What?
We have
Carbon
Carbon
County?
County, Pennsylvania. Fossil fuels is big still. So I don't think there are many EV chargers.
Oh, are there any EV charge?
It's in the name of the county.
Yeah,
Yeah.
yeah, the name of the county. Yeah, I didn't even know Pennsylvania has a county named Carbon.
Yep.
Really?
Dante knows it well.
I don't know
He
if I know it
does?
well, but I've heard of it. I don't, probably been
Yeah.
there at some point.
And where is that? Is that Western PA?
It's got to be.
It's Jim Thorpe.
It's
Oh, okay.
more northern than western.
Oh,
Oh,
no.
knows
okay.
area. Yeah.
Yeah, pretty country for sure.
Beautiful.
Yeah. So, Chris, are you traveling this week as well?
I was not.
Ah, okay.
Nope.
Look, that's why you look so rested.
Yeah, exactly.
Yeah.
I was taking it all in.
But
Yeah.
you guys are off to Miami next week, right?
Yeah, we have the big Moody's banking conference in Miami. Yep.
Mhm.
Dante, were you traveling at all, or were you looking
Last week and next week, but nothing this week.
Okay. Anywhere exciting or just
I'm swooping into Miami right after you to do something on the tail end of the summit. So I'll be there.
Oh,
after
cool.
you're there.
Oh, good. Maybe I'll come and heckle you then.
That's fine.
Yeah. Okay. Really? It's
Is that
fine.
for
It
credit
would be
unions?
par for the course.
I can't really tell you not to. I mean, is that a
Yeah. Yeah. Good point. Good point. Yeah. I had busy travel week. I'm so glad to be home. Yeah. I was in Chicago for a bit and was in Boston. A lot of asset managers meeting. All kinds of asset managers, equity, fixed income, real estate. Kind of interesting.
Yeah.
We're all very calm at the moment.
Well, asset managers are always pretty kind of no matter what's going on. And in fact, some of them kind of like the chaos, right?
The
You know?
volatility. Yeah.
They like the volatility. So I was at a couple of shops where they were kind of happy about all the ups and downs and all arounds. I think generally people are confused, but I'd say their mind is exactly where our mind is, and we'll talk about that in the podcast. So what I thought, this was a big week for economic data. Have you ever seen a week like this past week? We don't typically have. I mean, it felt like everything came out in the same week. That's very rare, isn't it? For that
It
to
happens
happen?
like twice a year where we get GDP and employment in the same week. So
Ah, okay.
it'll happen again in August.
Okay, so it wasn't just my imagination, but it felt like a blizzard.
No, it's rare. Yeah. To
Yeah,
get all of that.
blizzard of data. And I thought what we would do, we'd each go around and pick the data release that you're, most focused on or interested in, or you think is most telling. And then we'll kind of bring it all together, talk about what it means for the economy in aggregate. Maybe we do this kind of the same summary as we've done in the past, the probability of recession. And then play the game. Although I say that with some intrepidation because if we're talking about the data, we might take everybody's statistics for the game. But there was a lot of statistics, so I think we'll be fine. I think we'll be fine. Does that sound like a good game plan?
Great.
Great. Okay, good. All right. So Dante, you're the guest, and I'm guessing I know what data release you're going to pick.
Yeah, I'll kick us off with the employment report. Although I will say, I don't know
Oh, yeah, the employment
I don't know that it's
report.
actually the most important labor data because
Yeah.
even though it's pretty timely, it still feels pretty out of date already.
Right.
So the reference week was pretty early in April, and given everything that happened in early April, it feels like this maybe is a little bit better than what reality currently is today.
Oh, explain that for
It
just a
was-
second
oh.
for the listener. Oh, I'm sorry, Chris. Go ahead.
I was going to say it was right after Liberation Day, right?
Yeah, so the reference week is the week that
Yeah.
includes the 12th of the month. The 12th was on a Saturday in April, so that means that was the end of the reference week. So it actually went from the 6th to the 12th. Liberation Day was obviously only a couple days before that, so it's unlikely that companies were reacting to and making employment decisions that quickly in April that you would see the impact in this employment report. So it sort of looked like you would have expected it to look without sort of the tariff news that came up, and that's largely because I don't think it reflects any of that tariff news that we saw about a month ago.
Good
Job
point.
growth was 177,000, sort of in line with where it was after revisions in March, roughly still in that 150,000 sort of trend job growth ballpark over the last 3 or 4 months. There weren't a whole lot of changes. Industry composition was largely the same as it's been. Healthcare leading the way, leisure and hospitality, transportation, warehousing, picking up some support. Government holding up, I think, still a little bit better than we would expect. Overall government was still positive. Federal government was down just a little bit, but still we haven't seen any of sort of the big, DOGE cut related layoffs in the federal government, at least not in this data.
Just a sidebar there. I think the BLS called this out. They said if the federal government, if the employee's on paid leave or on, I guess it's a deferral, then it's just not going to show up in the
That's
data.
right. Yeah.
Yeah.
They continue to know, right? If you're on any sort of paid leave or you're receiving severance, right, you're not
Severance, right.
as losing your job yet. So that's not surprising, I don't think. But over the next couple months, I would expect to see a bigger impact start to show up in terms of federal government layoffs.
Right.
Big negative revisions to prior months, which seems like the same story we've had lately. So over the last 2 months, it was a combined negative revision of 58,000. So even though growth was a little strong this month, the 3-month average basically stayed the same compared to last month because you had sort of offsetting negative revisions. Wage growth was
just
fine.
a sidebar there. Sorry, I'm doing these quick sidebars.
You're fine.
On that one, at least my sense is that when the economy is throttling back or accelerating, then you get the revisions moving in one direction or the opposite. So if the economy is accelerating, you tend to get upward revisions to previous months, and if the economy is throttling back, slowing, you tend to get downward revisions. And we're getting downward. Last month we got down, I believe. Last month we got downward revisions. This month we got that pretty sizable downward revisions. Is that
Yeah,
fair?
that's right. And I think, and over the last 6 or 9 months, you've seen many more negative revisions than you've seen positive revisions.
Positive.
I think that, I would
Right.
agree with that.
Okay.
Wage growth, there wasn't really any new story there. It did decelerate slightly in April to 0.2% growth in April, but the year over year rate stayed the same at 3.8%. It's still been, sort of at or near 4% for the last 2 years, at least. Average weekly hours technically stayed the same, although there was a slight upward revision to March, so it stayed the same at a higher level than what we thought last month. But again, that was a pretty minor impact.
Sidebar there. Is that the right word to use? Sidebar? Yeah, I guess. Interruption. I'm interrupting you. Manufacturing hours fell though pretty sharply.
It's a good question. I
You didn't
did
look?
not see
Oh,
it.
I should have
I'll
made that
trust you.
my.
You could have had your
Yeah,
stat right there.
that was my stat. Yeah. Yeah, I think it fell
I mean,
back.
It's maybe not
Yeah.
surprising given what's going on, but
Yep. Right.
Fell by over an hour.
Okay.
No, that's wrong.
2/10.
2/10, 40 hours a week.
I was
Yep.
looking at the diffusion index.
okay.
Yep. Yeah. Anyway, sorry about the interruption.
No, you're fine. Household survey again was strong. I think stronger than we think probably is currently true today. Unemployment rate was unchanged at 4.2%. And that was actually, even though we had a huge increase in the labor force participation ticked up slightly. There was a big household survey employment gain over 400,000. But other than that, things were prime labor force participation ticked up a little
Can I
bit.
say on the sidebar interruption, whatever the right thing is that to your second, third significant digit? I don't want to take your stat, but
I was not going to use that, but yeah. So remember last month we talked about, we went from 4.14 to 4.15.
right.
It went to 4.19 this month. So I mean, it's basically been unchanged, even to two digits over the last 3 months now. So it still has not moved much at all. Employment to population ratio, both overall and prime EPOP, were both up again. Again, that there had been a little bit of weakness in recent months on participation in EPOP, and we've seen that sort of reverse here over the last couple of months. So things were on net, I think, pretty strong. But again, I think it's pretty strong with a big, sort of but at the end that we haven't yet really seen what the impact of the trade war will be, and it's certainly not showing up here yet. And we'll have to wait for the May data to see what impact there is.
That's it?
I think that's we got a lot of data to talk about, right? So I was trying to keep it short for you.
Yeah, there was a couple things in there that made me a bit more cautious about the report. I mean, you take the top line, the top line, the 177K, say no big deal. We talked about the revisions that kind of shows some weakening, and the consistency of the downward revision suggests the economy is kind of throttling back. The hours worked in manufacturing, which goes to obviously the trade war and the impact, the disruptions that's having on the manufacturing base. The other kind of cautionary note, I think, and just I want to ask you, is if you look at job growth in the transportation, distribution, and warehousing sector, that was pretty big. And I'm wondering, and it's actually been rising strongly since last October, November. So that feels like that's consistent with the surge in imports that we've seen in anticipation of the tariffs. So there's been a lot of front loading of imports, and you need to move that stuff around. Therefore, you need people to do it. If that's the appropriate explanation, then that would suggest there's an air pocket on the other side of this in coming months.
Yeah, I would agree. I mean, I think the growth is certainly not sustainable, and I think you're likely to see a pullback. And not to steal any of Marisa's thunder, but I think in the Challenger report, transportation was up there amongst the top private industries for announced job cuts in April. So I think you will start to see some pullback here moving forward.
Right. And then, of course, the other thing was the federal government employment. That's declining, but in all likelihood, it's declined more than is in the data because of the severance packages and the everything else, just delaying when that shows up in the data. Is that fair?
Yeah, I think that, I mean, we think there's been over 100,000 cuts, at least that have been announced and we're pretty sure are coming. And we've only seen a very small decline in federal government employment that's been reported so far. So I think it's certainly more declines to come.
Right. So I look at the report and, it's good in that it suggests that the job market, the kind of negative was the one you pointed out, the early reference week. So it didn't really pick up a lot of what happened after Liberation Day, so-called Liberation Day. But, I look at the report and, the top line number is fine. It's good. Suggests that the labor market, continue to hold firm in April through early April. And that's a critical firewall between a continued broader economic growth and a recession. Once that firewall comes down, you're toast. You're in recession. So that firewall still is up there, but in my mind, it feels like that firewall is just getting fragile. There's a lot of cracks in the firewall, and very vulnerable to if the trade war, for example, were to continue on without any de-escalation. Is that fair? What I'm just saying? Do you come to this from the same perspective?
Yeah, I think that's fair.
Yeah.
I mean, right, this looked fine if you sort of ignore the fact that it doesn't account for sort of everything that's happened over the last month. So I think that's a big caveat, obviously, that it looks okay. I'd be more worried if it looked very negative, knowing that it doesn't really pick up what happened in April. But I think we still have reason to be concerned that things are going to get much weaker moving forward.
Yeah, I guess what I'm saying is if you look at the top line number, you come away, okay, fine, no problem. And that's how the stock market's taking it. How investors, last I looked, the stock market was up quite a bit. But if you look into the bowels of the report, like you do, that doesn't give you as much. I don't feel quite as sanguine about, about the number.
Yeah, agree. I mean, you think
Agreed.
about
Okay.
if transportation warehousing starts to pull back, if government starts
Right.
to pull back, you start to have fewer and fewer industries that are adding to jobs, and it makes it harder to get a top line number that's strongly positive.
Right. Okay. Okay. Uh, Before we move on, Marissa, Chris, anything on the jobs numbers report that we missed? I mean, am I looking at this? Obviously, I'm looking at it with dark colored glasses. Is that appropriate? Or how do you see it? Chris?
Yeah, I'd agree with that. Right, it's still somewhat like all the data they'll be talking about. It's looking in the back or the rear view mirror. So, need to take it with a grain of salt. It's not incorporating all the policy changes that we know of.
Right. Marissa, any different view
I mean,
there?
I'm glad we're entering
Yeah.
this period on this level of strength, right? Because it means it's going to be harder to knock down. But yeah, I just think we haven't seen the impact of this yet. And you can find things that look weak if you look in the data. The number of multiple job holders has been rising for a while, the number of people working part-time for economic reasons, the number of discouraged workers. And that's all consistent with some of the other labor market data that show people aren't being laid off necessarily en masse yet, but hiring has become, has fallen to lows that we haven't seen in years and years and years. So it seems like employers aren't necessarily laying people off yet, but they're not hiring either. And I think you can find some evidence in the jobs report for that.
Yeah. The other thing, from a kind of a broader perspective, if you look at the unemployment rate, it hasn't really budged in about a year. It's kind of flattish. And that's after, if you go back the year prior to that, it had risen quite a bit. It had risen almost a point. Like we're at 3.5. Well, I guess not a point, maybe 6, 7, 8 tenths of a percent. We were 3.5, 3.4. Now we're at 4.2. And that all happened, kind of late 23 going into 24. And since kind of mid 24, it's kind of been just flat. And that seems to suggest that, and growth has slowed. Growth has slowed, and the unemployment rate hasn't, hasn't pushed up. It feels like, kind of the potential growth of the economy is starting to throttle back, doesn't it? I mean,
Yeah, and I think some of that is the immigration story too.
Yeah,
I mean, part of the
right.
reason for that rise in the unemployment rate had been just this massive influx of immigrants into the labor force, right? So that has slowed down significantly. So
Right.
I think that's helped keep a ceiling on the unemployment rate.
Yeah, so that suggests that, the immigration effects are starting to, it feels like maybe a bit premature, but it feels like it's starting to show up in the numbers, and it suggests that the economy's potential, that rate at which it can grow without, unemployment going changing, is now throttling back here. It's slowing down quite a bit. Anyway, Dante, do you agree with that kind of observation?
Yeah, I agree. I mean, I think
Yeah.
that makes sense to me that there's just less room for growth.
Yeah, less room for growth. Okay. Okay, Marissa, you're up. What do you want to focus on? What data do you want to focus on?
I'll look at the other labor market data that we got
Okay.
this past week. We got a lot.
You
So
want
we got, as we always,
potpourri? The potpourri?
Yep, it's
Potpourri? Okay.
potpourri.
Okay.
So we got unemployment insurance claims as we do every week. There was a pop in unemployment insurance claims. So they rose 18,000 over the previous week. They're at 241,000 on the week ending April 26th. That's still not high, but it's, significantly higher than we've seen since, I think, February. Maybe even, so that does suggest that maybe layoffs are rising a little bit. You don't see it yet in the JOLTS data. You don't see it in the employment report, but this, you would see it here first, right? So that's why we focus on UI claims. So I don't think it's flashing red, but it's certainly something to watch. It's not heading in the right direction, and it's not unexpected, frankly. I think maybe one of the more concerning things in the UI claims report is the continuing claims. So these are people that are still unemployed. So they've already filed the initial claim for unemployment and they're still collecting unemployment insurance. This is high, and this is the highest it's been since 2021. And so that, again, is consistent with this story that it's just becoming harder for people to find a job. You know, the people that are being laid off or unemployed are finding it more difficult to find a job.
Well,
Anything you wanna-
someone told me, and
Yeah.
because I was traveling, I couldn't look deeply into the UI claims data, that it was a few states, or maybe one or two states, where you saw the big jump in initial claims, like New Jersey, or maybe it was New
Yeah.
York. Is that right?
Connecticut and Rhode Island. Yeah.
Oh,
for the-
okay. So
for
it was
the
broader than
states.
that. So it was new. It was the kind of the Northeast in general.
Yeah. Yeah.
Oh, interesting.
But those are pretty volatile when you look at the state level data. You know, I was again looking at Washington, D.C., Virginia, Maryland, because that's been sort of trending up where you would see those Doge layoffs. And that didn't really do anything over the month when I look at DC. I mean, it's higher than it was at the start of the year. You're certainly seeing some of that impact, but yeah, this looks like it was led by the Northeast.
Okay, so in general, kind of like the employment report, the top line number 241 initial claims, that's still pretty low.
Yes. Yeah.
Yeah, it's no alarm bells, and it's just 1 week, but it's clearly moving in the wrong direction. And you're saying the continuing claims also signals some stress. So
Yeah.
kind of in the bowels of the numbers, you come away with looking at it with dark colored glasses as opposed to rose colored glasses.
Yeah, I mean, I think, right, employers, and we've been talking about the impact of tariffs. I wouldn't expect all these mass layoffs immediately during this tariff announcement. I think employers are going to do what they can to avoid laying people off. The first thing they're going to do is stop hiring people, right? And so I think that's the impact that we're seeing, is just to sort of freeze up in the rates of hiring, and people aren't going to leave their jobs when they don't feel great about labor market prospects. So that's the first thing you'll see. The layoffs will come later.
Mm-hmm. Okay, that's one part of the potpourri. What was it? One element of the potpourri? What is that? One piece of the
A
potpourri?
piece, yeah. I think
One
a piece
dry
probably.
flower petal in the potpourri.
Yeah. Okay, I like that. One dry
Mhm.
flower in the potpourri. What's the other dried flower?
So there's a bunch. I mean, there was the Challenger report, as you
Challenger,
like to
yeah.
point out, that I love.
Yeah.
Yeah, so this is announced job cuts by employers. So this isn't necessarily actual layoffs, it's announced layoffs. That fell quite a bit over the month, fell by 60%, but it's ups over 60% over the year. And you see that announced layoffs this is sort of interesting, over the year came mostly in tech and in warehousing. So back to the whole warehousing story about tariffs and imports, it looked good in the jobs report, but here we see planned layoffs increasing in this industry in the Challenger report. So they're up over the year. I mean, certainly you would see some indication of that. They also cite reasons for layoffs, and the employers that said explicitly that the reason for layoffs is tariffs was low so far, over 1,000 out of all of these announced layoffs. So over 100,000 announced layoffs, and only about 1,000 of them cited tariffs directly for the reason for layoffs. Mostly it's this uncertainty, souring job market conditions reason that's being given.
Oh, interesting.
Yeah.
Okay, that's the second dried flower. Is there a third?
Two other things I would point out.
Okay.
Maybe one is we got the ISM manufacturing survey, and that has an employment index component to it. That once again is below 50, indicating that manufacturers are shedding workers instead of adding them on net. And it actually rose a little bit over the month, but I mean, it's been below 50 for really since the pandemic began. I mean, there's been a couple months where it's popped up above 50 here and there, but you have to go all the way back to before the pandemic, before it was solidly at or above 50. So manufacturing's been quite weak for years.
Mhm.
And it continues to do nothing on the hiring front. And then the other thing I'd point out was back to the wage piece that we were talking about. The employment cost index came out, and this is a quarterly measure of wages and benefits, total compensation in the private sector and in the public sector. So private wages were up, private wages were up 3.4% over the year, and they were up 0.8% quarter over quarter. So that's a slowdown, and we haven't seen a pace that slow since 2021, I believe.
Is that good or
So
bad?
they're both slowing.
Slowing.
Yeah.
In the current context, do you consider that to be an issue, or because if you go back not long ago, we were worried about inflation. We were
Right.
rooting for wage growth to kind of cool off, and here we are. It's cooled off. Now is that a
Yeah,
good
I mean,
thing?
we're well below the 4% year over year where we
Yeah.
kind of wanted it to be below,
Right.
right? So I think given the prospect of higher inflation due to tariff policy over the next couple years, it's probably good that especially if you're sitting at the Fed, it's probably good that we're starting for a lower pace. It gives you more leeway here on wages.
Right.
And
Okay.
I would expect other policy to potentially push wages higher, including immigration policy. So
Mhm.
the fact that it's slowing now is probably a good thing.
Mm. Okay. Any other dried flowers on the labor market front?
Well, we got JOLTS data.
Jolts. Yeah, you didn't mention Jolts. Yeah.
Yeah, we got the job opening and labor turnover survey data. That there wasn't, Dante, I mean, maybe I'm missing something, but not much doing there really. I mean, actually quits rose a little bit, layoffs fell a little bit. The hiring and the job openings rate, hiring rate, I think was kind of flat, and the job openings rate continued to fall. So small changes, but nothing dramatic, I don't think.
Yeah, and the key, I mean, that's even more out of date, right? It's through the full month of
Right.
March, so it's not into
Yeah.
April at all. So it's not surprising that nothing really showed up there in terms of weakness.
One thing I've wondered about is when businesses, respond to things like uncertainty or even weakening in sales and try to think about their payrolls in kind of the labor market needs they have. It feels like the first thing they would cut back on, if there's some concern about sales or their business, is hours worked, right?
Mhm.
And we've seen that kind of sort of happen. They grow, at least historically, a lot of other things are going on now, but historically they cut back on temp jobs, temporary help, and that's kind of sort of happened. I know there's a lot of dynamics there that, are also involved. Uh, and then I think the next step is they pull back on open positions and hiring, right? And we've seen that, right?
Mhm.
The hiring rate, as you pointed out, last month was kind of stable, but compared to the previous month, but it's down quite a bit from where it was. And it's actually feels like it's on the low side of where you'd want it to be, if you look at historical kind of norms. So that then leaves you with the layoffs. So it's almost like the businesses have done everything they can
Yeah.
to avoid layoffs, but here we are. So if anything doesn't stick roughly to script, and their sales start to weaken, or business starts to start to underperform, they will start to lay off. That's kind of sort of how I think about the progression here in the labor market. Is that fair, Marissa? Do you think about it the same way?
That's the way I think about it. I think
Yeah.
layoffs are sort of the last resort, right?
Last resort.
It's obviously employers don't want to lay people off, and it's expensive to lay people off because if you
Right.
do that and then conditions change, you have to go through the process of recruiting and rehiring and training and all of that stuff. So yeah, the first thing you would do is just cut back on how much people are working if you have hourly workers or part-time workers or workers you can shift to part-time, and then you would just not fill open positions.
Yeah. Okay. All right. Chris, you're up. What's your data release?
It's the GDP.
GDP.
Yeah,
Q1 GDP.
not quite a potpourri, maybe a thorny rose. Let's see. I don't know.
Thorny rose. A
Because
rose. Really? A rose? There's a rose in there
there's
for
some
that report?
rose. There's some
Okay.
rose.
Okay.
Right. I don't know if it smells sweet, but there's
I think
rose
you got
there.
to come up with a better metaphor. Is it
All
a
right.
metaphor? Yeah, I think it's a metaphor. Yeah.
Trying
But
to play
anyway,
off the
go ahead.
potpourri. It's tough to follow potpourri.
Potpourri is pretty good.
So the big news on GDP is that we had the first decline in the first quarter since the first quarter of 2022, right? So that made the headlines, down 0.3% on a real inflation adjusted basis, largely due to the surge in imports that we observed, right, in anticipation of the tariffs, right? So that's the news story. Tariffs grew a lot, or I'm sorry, imports grew a lot because of the tariffs, over 40%, and that subtracted about 4.8% from GDP. So that's a significant drag. I believe it's actually the largest drag on record. So it's
Wow.
a big deal.
Hmm.
You did have some compensating effect here, but also due to tariffs, where you had business investment actually rise about 20%, a little over 20%. So, again, I see that as anticipatory. You had businesses who were maybe buying their computer equipment or other equipment ahead of the tariffs, and that led to some of that increased investment activity we noted. So if you look at domestic demand, right, which is just consumption plus investment, so you ignore the tariff, I keep saying tariffs, so you ignore the imports, the net exports component here, you ignore the inventories, which again tend to be volatile, but difficult to measure. Underlying domestic demand actually still looked pretty good, about 3%, right? So
But that goes with the forward buying, though.
that's with the forward
Okay.
buy. Yeah.
Okay.
So again,
And then there's a forward buying and consumption too, consumer spending, right?
there is presumably, but the consumption, and although consumption growth was positive, it was lower than it was in the fourth quarter, right? So there's some pullback in that consumption as well.
Yeah, but despite the pull forward, you got a pretty soft consumption number. So I
Right,
mean,
that's what I'm saying. That's what I'm
okay,
saying.
fine, right, okay, yeah.
Yeah, and then of course government.
So
also
where's the
tracked that.
rose? Where's the rose?
Well, for now, the rose looks pretty good. It might be wilting, but
okay, a thorny, wilting rose. Okay, that's better. That makes more sense to me.
Yeah.
Yeah. Okay,
Again,
so
largely looking in the rear view mirror here. That's the issue with this report.
right, but I mean, it was a negative number, negative 0.3, and it feels like, yeah, it's related to just the anticipation of the tariffs. Also, Doge was in there too, wasn't it? Because federal government spending fell.
Yeah, quarter
Doge
point
cuts, quarter point.
lost in government.
So the tariffs, the trade war, and the Doge are their fingerprints all over the report, right? I mean, and it was a weak. No matter how you slice it, it feels like a weak quarter, right?
Yeah, definitely
Weak,
weak. Now
yeah.
I suspect there'll be some revisions.
Some revisions. Okay.
Well, maybe it comes in a little, but it's not going to swing the numbers dramatically, right?
Right.
Clearly,
I mean, I could see it does feel like the inventory. So what you would thought of would happen is there's a surge in imports to get ahead of the tariffs. Those, if they're not consumed, and we know consumption was very weak, then it has to go into inventory, presumably. And inventory investment did increase, but it didn't increase all that much, or not as much as you would have thought, right? And so what you're saying is maybe because that number always gets revised because measuring inventories is tough and it's always lagged, we might see more inventory accumulation in subsequent GDP releases. And so we might go from a negative to a positive, although it's still going to be soft. It's not going to be negative is what you're saying.
That's my expectation. Yeah, it's just very difficult, right? There's estimation, there are lags in how you estimate these things, how you time them, right? Both on the inventories and on the exports, imports. It's just a difficult statistical exercise.
Yeah. So in theory, the inventory should have captured the imports, but in practice, you're saying it perhaps probably didn't.
Yeah, it looks like something's missing. Right?
Something's missing, right? So what does that suggest for the second quarter then? Does that suggest the current quarter for GDP? Presumably another soft quarter. It could be negative, but you might see some reversal of these measurement things, and you'd see a kind of a pop to growth because imports will come down.
That's right.
Quarter. Right.
That's right. So I think we should be kind of blending these quarters together.
Okay.
The full picture, right?
Right.
So again, I think Q2 will also have some quirkiness in it in terms of reversing some of these issues, but I'd expect overall softness across the board.
Right. One other kind of a more technical point question, and I don't know if we've talked about it in the past, but and Marissa, maybe, or Dante, you guys may know this. The way the Bureau of this now goes to the Doge cuts and its impact on federal government spending, which declined in the quarter. The way the government uh, calculates government GDP, or what's in the GDP report, is by looking at the number of federal government employees and their compensation, and they use that as a basis for coming up with that estimate. So if you actually cut people, which was what Doge was doing, then that would show up in a decline in government GDP, and that's what we're saying. Do I have that right? Do you know, Dante or Marissa?
Yes,
Dante?
I think that
You
I
have it
think
right.
I think
Okay.
that reflects government wages paid.
Wages paid.
Yeah. Right,
Right.
Dante?
Yeah, I mean, it's included in there. I'm not sure exactly how they estimate it every quarter, but I mean, it's definitely there as part of government
Yeah.
spending.
I think when they calculate GDP, they collect data from all kinds of sources. For consumption, investment,
Yeah.
net exports. They got a blizzard of data sources. And in the case of government, I think the way they do it to make it tractable is they actually look at how many people are working in the federal government, what their comp is, and they use that as a basis for calculating, government GDP, which is, government spending or expenditures or outlays that are in the report, I think.
Yep.
Someone out there will correct me if I'm wrong, but I think that's the case. Because it's more of an accounting exercise, almost an accounting. If you cut government jobs, you're gonna hit federal federal government spending or GDP, and it's going to and you get the kind of effect you saw in the first quarter. Okay. Anything else on the GDP number? A corollary to that is the personal income and consumer spending data that kind of comes out, the monthly data. I guess no surprise there. It looked like it showed pull forward spending, in the consumption data, but anything stand out there, Chris?
No,
No.
I didn't
Okay.
see
Okay.
anything.
Okay. All right. Okay. All right. I'm going to go, and you'll know what it is. It's the Conference Board Survey of Consumer Confidence. My favorite leading indicator of recession. When that declines, typically sentiment reflects the economy, what's going on with jobs, what's going on with inflation, the stock market, those kinds of things. But at points in time, the causality shifts and confidence caves, declines, consumers lose faith that they're going to be able to hold onto their job, and their financial situation is going to erode, and they pull back on spending, and that's the basis for recession typically. And the Conference Board Survey of Consumer Confidence, which is a monthly survey done back many decades, that I think does a really good job, and particularly in recent years, a very good job of kind of giving us a sense of what consumers are actually thinking and what they're doing. It doesn't feel as biased by political overlays as some of the other surveys do. It just feels like it's more consistent with what consumers are actually doing. And that continues to fall very sharply. You got the data point for April, and it fell again more than anticipated. And a good rule of thumb historically is that if the consumer confidence index, falls by more than 20 points in a 3-month period, we're going in. Consumers to recession. Consumers have lost faith. They're packing it in, and that's the start of an economic downturn a few months later. I think the average length of time between when you get that 20-point plus decline and you get recession is about 6 months. In the month of April, the index is down 19.3 points compared to its 3. So not quite there, that kind of sort of like our forecast, right? I mean, it's kind of like our forecast, not quite recession, but feels like we're awfully close, and, things have to start going right here, but otherwise we'll go into an economic downturn. The other indicator in there is the job that we watch very carefully, or at least I do, the jobs. How easy are jobs to get, and how hard are they to get, and you kind of look at the differential, and that tends to be a very good measure of unemployment. It does a pretty good job of predicting unemployment, and it is consistent with stable to slightly rising unemployment here. So that's what we're saying. So all in all, that's a pretty downbeat report as well. Guys, I know you look at that data too. Anything else to add on the conference board survey? Dante?
I'm sort of more curious what you think. You know, obviously, if you just look over the last 3 months, it's not down 20 points, but it's been declining, right, ever since November. So if you look, the total
Yeah.
decline since November is much higher than 20 points. So it's not a sharp 3 month decline, but it's a sort of prolonged 5 month decline at this point. So I'm not sure how you read that.
I stick to my rule of thumb. Because I think if you do, you're saying go look back 4 months or look back 5 months. And if I look back 5 months, since the peak was November, the election, the peaked and then since then it's been sliding. It's down 20. I think I did the calculation this morning, 26 or 27 points, something like that.
Yep.
But,
Right.
it's not quite consistent with the rule of thumb. And I think if I look back historically, there are periods when you might see a kind of a more attenuated decline and it doesn't result in recession. So I'm sticking to my rule of thumb, but just reinforces the point. This is not something that just happened. It's been happening. People are getting nervous.
Makes sense.
Okay. Cris, Marisa, anything on that? No? Okay.
Nope, sounds consistent.
All right. I guess I'm just trying to think, were there any other, I think we got all the data. There's a lot of housing data. We even put out our house price data. Oh, that declined too, right? Right, Cris? The house price data declined for the month of April, I believe, or March, excuse me. It'd be March.
That's right.
Right. So that's some weakness. Anything else out there that week? That's enough, but just asking. Okay. All right. So I don't know. Let's bring it all together. And what does it all mean? In terms of your thinking about the economy, and the way we've been kind of summarizing our perspective on that is, we've been doing this for quite some time. What is the probability of recession beginning at some point this year? Let's go around the group here and get what your current probability is and how that's changed, if it has at all. Marisa, what's your probability?
I'll go with 55%, which is down 5% from where I was a week ago.
Oh, okay. And despite all this data, you brought it down by 5 points?
I did, yeah.
Why?
I just see the administration backing off a lot of this. And I think if they continue to do that, and if they do that soon enough, then this might be salvageable. I think if this vacillation continues for a lot longer, then I think it's going to be very hard to avoid a recession. But they seem to be getting spooked by some of the data that's coming in, and I think you have a lot of CEOs whispering in the ears of administration officials, warning them about the effect of the tariff policy. So I think perhaps we have a serious pullback coming soon.
Okay, so what you're saying is the key to whether we go into recession or not are the tariffs and the trade war. And if the administration is able to take an off-ramp here and de-escalate, bring down the tariffs, with China and others, and they do it soon in the next, few weeks, month or so, that would be potentially sufficient to avoid recession. Even though you're over 50%, you feel less nervous about this because the folks in the administration are, and I guess overseas, the Chinese today, for example, have been saying that they want to talk about this. And so that gives you more confidence that they will come to terms.
Yes.
Okay.
But I think it has to happen soon, because I think there's a real risk that even if there is a pullback, maybe the damage is already done, right? So, and then it just becomes this sort of negative momentum that's building on itself. But I think if they can hammer this out in the next couple weeks, month, then we might be able to salvage things.
I know this is impossible, but I'll ask it anyway. How much time? Are we saying Memorial Day? Are we saying July 4th? Are we saying Labor Day? What do you think?
I think in the next 2 to 3 weeks, we have
Memorial
to have
Day.
some real clarity.
Yeah.
When is Memorial Day? Yeah, sure. Memorial Day.
Yeah.
Yeah.
End of May, right? Yeah, I think so.
Yeah.
Okay. Fair enough. So you're 55 down from 60 because you're feeling a little bit better that the tariffs are going to come down here.
Yeah.
The trade war is going to de-escalate.
Yeah.
Okay. Dante?
I always struggle to remember where I was last month when we talked. I think I was at 50%, and I'm gonna stay at 50%. I don't feel any better than I did a month ago, but I don't feel worse yet. I think like Marissa, this time next month, I think we'll have a better sense of which direction things are headed. One, because we'll have data that's starting to show some of the initial impact of, sort of the initial announcement of tariffs. And then two, we'll have a better sense of, is the administration going to walk any of this back in a meaningful way? And I think a month from now, if they have not done that, I think that, there's more serious damage to come. So I'm going to hold at 50 for now and see what happens a month from now.
So kind of a similar story to Marissa. You're looking at the tariffs and the trade war. And are you saying if we don't get a de-escalation, say by Memorial Day, then your recession odds will rise?
Yeah, I say right. I'm staying at 50, but I think I'm going to go one direction or the other next month. They're either going to rise if
Yeah.
nothing
Or
has
they're gonna
happened,
come
or
in.
they'll come
I
in
see.
if
Yeah.
there's some movement. Yeah.
Got it. Makes sense. Makes sense. Chris?
I was at 55. I'm going to drop it to 50,
Ooh.
Okay.
joining Dante's party. Some very similar reasons. I do see some hints, at least, of progress on the tariff front. In terms of Memorial Day, I think we need something by Memorial Day, but it not necessarily a finished trade deal. It's enough just to have an announcement that we're getting close, or identify some specific country. I think that would certainly take some of the pressure off.
Doesn't it almost have to be China
Yeah.
with China? Doesn't it? I mean,
I think so.
don't the tariffs have to come, they can be some kind of deal or, an arrangement with the Japanese or the South Koreans or the Indians. It sounds like those are Vietnam, those are the countries that might be first, up in terms of getting the tariffs back in. But that seems all like a sideshow compared to China at 145. We have tariffs on their product of 145. They have tariffs on our product of 125. And that means there's no trade. Trade is collapsing. And we're the two largest economies on the planet. And if trade's collapsing between us, it feels like that's recessionary by itself. Doesn't it have to be with China?
Yeah, you certainly have to get down from 145 with China within this year to avoid a recession. But in terms of the staging here, my assumption is we'll probably announce some deals, whether they're finalized or not, prior to that. China is also the toughest nut to crack. And with China, I think already some indication that, yeah, we're at least starting to think about talking to each other, right? That's even today was viewed as a very positive sign. So I think we'll move in that direction. Maybe there'll be some pause or some extension, if you will. That could be a very positive sign to help rebuild some of the confidence. But you're right. If we don't deal with these very high tariffs on China, that is going to be fodder for recession. And I'd say we have a month or two maybe before it really sinks in.
Yeah, I guess just to make it more concrete, what I'm saying is it doesn't. All these other deals, all these other arrangements outside of China don't really matter, in terms of what it means for whether we go into recession or not. If we continue to maintain the same tariffs on China and they can maintain the same tariffs on us here going forward. So that's what I'm asking. That's kind of my view. I'm asking is that consistent with your view? Is there, if we don't get any movement on China, do you still think there's a chance we're going to be able to avoid going into a recession?
Extremely unlikely.
Okay.
Let's put it that
Fair
way.
enough. Yeah. Right. It feels like it's all about China, doesn't it? To me,
Yeah, to
at
a
this
large
moment,
degree.
to a large degree.
Yeah.
Unless I guess you could drop tariffs on everybody across the globe, and all you're left with is China, and maybe I guess. But
even there, I think it's going to be very difficult, right? Because of the supply chain effects,
right
in the short term, right?
Yeah. Yeah. All right. Well, I was at 60. I'm still at 60. And I think it's all about China, and that's why I'm still very nervous. All this other stuff seems like a sideshow to me. Any kind of arrangement with Japan, it's meaningless in terms of, what it means for global trade, the economy, and everything else. But for China, that's massive. I mean, and the Chinese feel like they're dug in. I mean, it doesn't feel like they're going to relent in any way. It feels tit for tat. So if the U.S. raises tariffs by X, the Chinese are going to raise tariffs by X. We're now at a cap. It can't go any higher than this because at these tariff rates, we're effectively shutting off trade. And conversely, if the U.S. cuts by Y, the Chinese will cut by Y. They'll just follow us down. But it's just about it's just tit for tat. And so if that's the case, if it's all about China and they're dug in and the dynamics are much more vexed, and it's not just quite clear how how the administration is able to get those tariffs down in a way that they feel comfortable with. It just feels like the probability that they don't get a deal or they don't get an arrangement or they don't bring down the tariffs by, and I think Memorial Day is the day, kind of in the future, feels like we go into recession. What do you think of that,
no
Chris?
deal with China by Memorial Day for you is the
I think
trigger.
that's a trigger.
Wow. Okay.
Right. Because I think at that point we're going to see not only higher prices for a lot of things, we're going to see shortages of things. I saw this one statistic where I didn't realize this, but I believe 80 to 90% of all the ibuprofen that we consume in the United States comes from China.
Really?
Yeah. Acetaminophen, which I think isn't that Tylenol? About, I don't know, I'm making this up, but 60, 70%. Can you imagine if you can't find Motrin on the store shelf? Right? Advil? You can't
I'm a
find Advil?
daily Advil popper.
Oh, well, don't tell me that. I hear you though. I mean,
You don't see exemptions coming for those things, though. I think they'll
things
back
that were the shortages where you might see shortages. I don't.
Yeah, where
Yeah,
it's
maybe.
so acute, where it's so lopsided.
Well,
there's
okay.
no,
Well, then I think that if they put on exemptions like that, then yeah, then the Chinese then you're moving in the right direction.
Yeah.
That's a de-escalation, and that it satisfies my
Okay.
if they do that.
But even then, I mean, the time lags are long here, right? So if you wait until the shelves are empty to make a move, like you're still talking about 2 months at least, right? I mean, it's usually like 60 to 90 days of like transit, like logistical, time to get things from China to store shelves in the US. So it's like you can't, if you wait until things are gone, you've already sort of waited too long, right? That seems to be the biggest concern. It's like, yeah, there's no impact right now, but if there's no flow happening, you're leading to an inevitable shortage of things at some point. And if you don't restart that flow quickly, you're going to get to that point, even if you do make a deal in the interim. And then what does that do to consumer confidence? And what impact does that have, even if you've now made a deal, but you're still sort of seeing the ramifications of it? That's, I think, what I'm concerned about.
Yeah, good point.
Yeah.
But I
stock
guess.
up
Oh, sorry. Go ahead, Chris.
Stock up now, I think, is Dante's advice.
I feel like that's the news back. It seems like COVID all over again, where start hoarding what you need because you don't know if it's going to be there in a few months. So
yeah, the next thing I'd watch is if there's any runs on different products. People start hoarding stuff. Yeah. I mean, I know I still have toilet paper from the pandemic down in my basement. I actually have what's that tape? Duct tape. I have duct tape from 9/11 down in my basement. I'm sure it'll come in handy at some point.
I don't want to know.
Yeah, you're too young. You're too young to remember. But back then, they were telling everyone to have plastic sheathing and duct tape just in case there was some kind of nuclear fallout. It was you don't remember that, do you?
I'm not too young to remember, but I don't remember. I don't remember hoarding after 9/11. No, I don't.
Well, you were young and you thought, oh, nothing's going to happen to me. Yeah. I mean, I had my first child. We were pretty nervous at that point. Chris, do you remember that? Am I making that up?
I was in DC and I don't remember.
So was I. I was in DC.
You don't remember the duct tape and the
duct
plastic
tape
sheathing?
hoarding? I must have missed out on that.
Oh, yeah.
I'm not going to say where I was because I don't want to make you feel bad. So I won't tell you where I was.
In utero.
I wasn't that. I was in high school, but
in high school. Yeah.
Yeah.
That's funny.
Well, I'm certainly going to go out and buy Advil now. I had no idea.
Yeah. There you go. Hey guys, do you want to play the game or we've already I'm not sure. You want to play a couple rounds of the game and call it quits, or what do you want to do? What's the mood of the group?
I'm always up for the game.
Okay, let's play.
This has got a good one, so let's
There's so many good ones. But okay, Marisa, you're up.
Okay, 8.1.
Oh, I should say that. Can I say? I'm sorry, my fault. The stats game. We each pick a stat. The rest of the group tries to figure it out with clues, deductive reasoning, and questions. The best stats one that. Well, you know what I'm going to say. So go ahead, Marisa.
8.1%.
8.1%. Is it in the employment report?
No,
GDP report?
it's a corollary of the GDP report.
Oh, income in the income or consumption, consumer spending, or
Yes.
in the consumer spending report?
Yeah.
Is that a growth rate?
Yep.
In a
Is it-
category,
Yeah.
the category spending.
One of the categories was up 8%, 8.1%.
Mhm.
Okay. Okay. Well, I think motor vehicles were up. It's got to be one of the hoarding
You got it. It's motor vehicles and
motor
parts.
vehicles. Oh,
Yep.
motor vehicles parts.
Yeah.
Okay.
So real consumer spending on motor vehicles and parts was up 8.1% over the month, and it was up 10.5% on a year-over-year basis, which is the strongest year-over-year growth we've seen since like 2016. I think you have to go back to see a number like that.
Wow.
Yeah, and this is just it's the buying ahead of the tariffs. And as you two can attest to, people went out and bought cars thinking that
Yeah.
cars are going to be a lot more expensive in a few
Yeah.
months.
Yeah. Hey, let me go next. Okay. Is it
Okay.
okay?
Right.
Okay. I'm generally a gentleman and let everyone go, and I don't do it, but I got a good one. 44. The number is 44.
Are there units on the 44 or
It's an index.
an index?
Think of what
Something
From
like
the conference board?
it's not from the conference
Oh,
board.
is it from the ISM?
It is
Ah.
ISM manufacturing.
Is it, so it's something
That,
44.
is that
One
new
of the-
orders? It's
Not
one
new
of
orders.
Capital
production.
spending plans?
No. It's one of the
production.
production.
No.
I
Production.
knew one of
Oh.
them, yeah.
So the production, the ISM survey, which we talked about earlier, in aggregate was, I think I'm making it up, 48, I think. So below 50 threshold for contraction. But the components, if you look at the components, actual production, which by the way, if you look at the coincident economic indicators, the very best coincident indicator is jobs, employment. So the day, the month that employment goes from positive to negative is the month that the recession will be dated by the National Bureau of Economic Research. The second most significant coincident indicator is manufacturing production, industrial production. So this is not that, but this is a window into that. So this is the production component of the ISM survey goes to production. 44
Mm.
is incredibly weak. I think it got that low, barely that low in the teeth of the pandemic shutdown. And I think every recession going back, because this thing's been done for many years, decades, you get recession every time you're at this level. I mean, it's screaming, I got a problem, in the manufacturing. Well, there's so much irony around that, right? Because the tariffs are supposed to be about helping the manufacturing base. It's just crushing the manufacturing base, just crushing it. So at least in the near term. So I thought that was a pretty telling statistic,
Mm-hmm.
right? Don't I get any pat on the back for that one?
That's
It was
No?
a great number.
A great number, thank you.
Congratulations.
Yeah, very good. All right, Dante, you're up.
Let's go with 26,000.
Is that the number of jobs created in the transportation and distribution sector?
It's not. It's close to that. It's not that. That was 29,000, but that was a good guess.
Oh,
Oh,
29. Oh, man. Is it an increase in jobs in the sector?
It's not in a sector. It is an increase in jobs, I guess, technically.
Oh,
oh,
that's weird. Technically,
technically.
what the hell does that mean? Technically, was that in
It's technically an increase in the number of people employed, not in the number of jobs. So we're talking about the other survey here.
the household
That's-
survey?
Yeah,
Yeah. And what's the number again? 26,000?
26,000.
Is
And
it
the-
like the number of, it's not an industry? Is it a class of worker?
It's not an industry or a class of worker. No.
Mm.
I don't know. I give up. What is it?
Yeah. What is it?
So it's the adjusted household survey measure. So the household survey employment was up 436,000, but if you adjust
Wow.
Wow.
payroll
that's quite an
survey
adjustment.
concept, It's only up
You know,
26.
he held out on me because I was looking for the dark side of the employment
I almost
report,
said it in the
and he
initial, and I
wouldn't
was
even
like,
give
"Eh,
it to me. He didn't give
I'm
me
gonna
that one.
stop
That's
short
a
of that
good
one."
one.
Yeah.
That is a really good one.
Holding in my pocket. So yeah, if you look at the adjusted measure of household survey employment, it's only up by an average of I think about 40,000 over the last 3 months. So
Oof.
it's quite a bit weaker than the payroll survey. Again, there can be some noise in the household survey, but it's certainly reflecting even, it had been weak for the last couple of years because of the, sort of population control issue, and they weren't capturing immigration effectively. But I think that story is harder to make now. So I think, it's more likely that that's reflecting some true weakness in the labor market. So
Do you
you're
know
looking-
what was the big adjustment? Was it self-employed or
I do not know off the top of my
Okay.
head. I didn't dive into it. I saw it right before we jumped on.
That's a good one. That's a really good one. Okay, Chris, you're up. You're last.
All right, this is a tough one. Widely covered in the media, though, so this is maybe our listeners will get this.
Okay.
Reported this week, 10.3% decline in the month of March compared to the previous year. I'll even,
10.3%. Is it a price?
nope,
Is it jobs related?
Nope.
GDP? Is it GDP related? No.
nope. It's people.
Oh, it's people.
People.
Down 10.3%. People. They widely reported, widely covered in the media.
Yeah.
Is it Doge related?
Nope.
is it immigration related?
No.
Huh. We're going to kick ourselves when we hear it. I know.
10.3%
Down.
people.
All right, we give up. What is it, Chris?
It's international arrivals to the U.S. They were down 10.3% in March, which got a lot of headline play. But if you dig a little bit deeper, it's largely due to the timing of Easter this year. We had a late Easter.
Oh, I see.
I just want to highlight that, we got to be careful with some of this data that's coming out as well.
Right. Well, was it still weak, even accounting for Easter?
It's a bit weak. And it was extremely weak for Canadians. Canadians are not coming to the United States and have no plans to. But for Western Europeans, it's a little bit down, but not majority.
Right. Okay, well, that's a good one. Okay, I'm glad we did the game. Before we call it a podcast, anything else anybody wants to bring up? Any other issues, concerns, worries?
FOMC meeting coming up. What's your
next week?
Yep. What's your thought?
I can't imagine they do anything, right? They're going to sit on their hands. They told us that that's what they're going to do until they get some clarity around all this tariff policy and other economic policy. So anyone disagree with that? I don't think so.
No, I'm sure they're happy about this jobs report, right? Because it gives them some more cover to just wait and see. I think if this had been really more negative, then they would have had this. What do we do? Do we wait for more inflation data and see how that pans out, or do we have to start cutting?
Yeah, that's a great point. I'm sure you're right. Certainly the pressure on the Fed would have been pretty intense if it was a soft number. Yeah. Okay. All right. Well, we got something to talk about next week for sure. Already on the docket. Very good. Okay. I think we're going to call it a podcast. I hope you guys and the listeners enjoyed it, and we'll talk to you next week. Take care now.